Hi everyone, welcome to this Grow More channel. So today in this video we will see how to identify stock option buying opportunity with step-by-step details. Okay, so definitely it's a very complex thing, but definitely I'll try to make it easy. Okay, so there are almost 200 stocks, FNO stocks are there. Now let us go to the option chain and see. Now what you do is here, let me just take to Bank Nifty here, and now that is September is there. Now what you do is add all the open interest of call and put option and see the total. Whichever is higher open interest, then that is the strike price we have to identify and focus now. In case of Bank Nifty, now if you see here, all add all these things. I am not going to do this. You can do it yourself. The highest open interest is at 57,000, 29,000, 50 and 50,000 total around 70, 80,000 is open interest position and is the highest open interest. Okay, now let me open my Power BI file. So now I have version 5, is a new thing developed here. And here I'll just clear all and then go to the bookmarks and select Bank Nifty and go to Bank Nifty. Okay, so here Bank Nifty, if you see here for 12 September, highest open interest 57,000. Okay, around 80,000 contracts which I told you, 80 to 190 exactly. Now highest open interest wherever is there. The logic is you have to see this our strike price, and this will be the place where expiry can happen. And now getting the details of this, where is the highest open interest for put option, call option, you have to see. Now currently the market where it is trading, let us understand that. Let me just take you through the option Bank Nifty. You can see Bank Nifty trading on 54,809. Okay, this is the place where it is trading now. Now 50,000 is the highest call option interest, 475. So now people are not ready to sell 54,500 also. If you see here, the open interest for 50,000 call option is very less. So 55,000 is the next. So I am expecting the price to reach there. Now you have to see from the perspective of the option sellers. Option sellers, if you see here, why they are selling so much of put option of 57,000. Either it could be big seller or big buyer. Now 29,000 contracts are there. Let us go to the option data and see here 57,000. I am giving an example so that you can see the same logic for other stocks also, and I will tell you how to identify. So 57,000, you can see the put option here, and now expiry 30 September expiry. Now you can see here from 20th end of the August expiry, there is some big spike happened here around change in open interest 6,000 contracts, 5,500, 13,000 contracts. These 3 days the option has built the positions here around 2,278. Okay, this is the price where they sold also. Video play P at that time was around 1,592, 2,001, 2,500, 2,500, 2,100. This is the place where maximum the selling happened in the open interest. Now after selling this at that rate, and now you can see here 2,180 to 2,000 rupees it got. Now the latest price is there. Now coming back to this here, now 57,000 is what I am expecting, means maybe we can go around 56,000 also possible. Okay, at least 100,000 points rally is possible in Bank Nifty. That's what my expectation. Even in my Telegram channel I mentioned that 53,000 call option, the target is around 3,000 mentioned here. Let us see here what is the price we saw in 53,000 call option. If you see here 53,000 call option here, if you select a call option and then 53,000 call option here, yes. Okay, now you can see here already we reached I put a Telegram channel around 1,200 was there at that time. Now it is almost, it has touched 2,100, almost 800 and 900 points rally we have seen in call option, 53,000 call option, and another 1,000 points rally is possible in this 53,000 call option. So the logic is behind that. So top high open interest, highest open interest wherever it is there, that is what we have to focus, and we see current market price. Whenever there is a fall, there is big gap on downside, then we expect the price to rally. Now here if you see here, come in this report here, I given here all stocks. One report is there. These stocks, this report tells you the highest open interest of call option, put option also. Okay, and then one more report I recently developed here. This will go straight to that report here, stock option buying opportunity. There day wise you can see here what is the stock name and what is the highest open interest, what is the future price, and what is the gap. Okay, this is very important. Now let us see here, let's take example of say August to say September. We will take an example of September here. So please note that this is not a recommendation to buy or sell stock option futures or trading. It is just the education purpose only, and any trades you are taking and making loss, I am not responsible. So this please note that this is for education purpose only. This is a disclaimer. 1st September. Okay. 1st September, let us see here. Eternal. Okay, highest open interest you can see here. 300 rupees open interest stock price, and then here future price 323. So I am expecting a fall in Eternal on 1st September closing basis. Okay. So let us see here Eternal what happened on after the 1st September. Okay. Now let us go to Eternal here. Click here. Go to all stocks. Eternal. Okay, so in this 200 stocks, identifying which one is going to come upside or downside, it is very difficult. Okay, now if you see here, let me take to 1 hour chart here. Now 1st September, let us see here. September, let us see here. Around okay, now here 317. Okay, that time 373, 23. I'm just giving the first example here, top example. So I'm expecting the price to come down here. Okay, now we have some more time. Let us see latest what's happened to Eternal. If you want to filter for Eternal and see here, let us see here E, and then click Eternal, and then see all the dates. Click release this filter. 1st September, if you see here, the price was around 8% upside. Okay, now what happened here is 323 was the price. Now the top open interest was 300. Now what happened here is because of short covering, now the price has come, the top open interest has come up on the upside, and then now almost we are there 0.08%, 0.8%. Now the filling has happened here. Okay, now whenever you are going for a stock option, you have to first see the signal also. At the same time, you have to see the top open interest and future price. Now remove the filter here, and we will go for the late 1st September as usual. 1st September, and now here let us remove the filter here. Clear all strikers. Okay, now if you want to buy put option, for example here next is Titagar, JSW Energy. JSW Energy also 5% is there. Let us go for highest only. Okay, now let us go for another date, 2nd September. CG Power is there. Excel interest is there. Okay, CG Power, let us see. I am expecting a fall in CG Power, 6% is there, downfall. CG Power. Okay, now here on September, CG Power. CG Power, you can see here that the CG Power 740 is the price, and that time open interest was 700. Okay, now let us see here future price. What is the future price I am taking here? Let me just see here. Future price. Not here. Okay, this is fine. Just I want to check this future price. There is okay. So future price CG Power 746%. There is a price, and you have to see here what happened to CG Power. CG Power. You can see here day wise what happened. On 5th September, you can see the price. The gap was almost 6%. Immediately there is a big rally. Okay, the short covering rally happened, and the highest open interest strike price came to 750. Okay, this is very important. You have to always track this whether short covering rally is happening and the top open interest strike price is not changing at all. That's what you have to focus. Now here let me take another example. 4th September I will take here, and then remove the filter here. Godrej CP Tata highest I want to see. Godrej CP I want to see. Okay, let me check Godrej CP. 4th September Godrej CP. Okay, this is a very classic example. Okay, on 4th September, you can see the price is started falling now. Okay, started falling here 1251. Okay, that's what the example. 1100 is the target here. Okay, now let us see here Godrej CP also. What is the current status? 4th September Godrej CP, and all the date if you remove here 1100. Okay, highest open interest strike price now it has from 1300 100 gone to 1300 now. Okay, this is very important to track here. If the price top open interest strike is not moving, then you have to stick to the targets. Now the next example, let us see another example. Now here 3rd September. Okay, we saw 5th September. We can see 6 September also one example. HR Motors on 5th September. HR Motors on 6th September. On 6th September here, the 6000 was the open trust strike price and the future price 6600. So when there is big gap, what's happening is the short covering rally is happening. Either they'll catch up to this price or the price will come down. Now here, let us take latest example here. Glenmark. Glenmark is one example. Now see the chart here. What's happening to the chart? Glenmark. Now the rally happened here from September here almost from 1900 to 140. Now here to 135 is the closing price and then open to service 1980. So I'm expecting that the price to fall for this Glenmark. So the put option of 2100 could be a very good chance that it can spike. Now to take the opportunity, see possible that the market is not rallying as per expectation and the rally may not come. So how to make the option strategy also? Take a debit spread. What I'm doing telling here is let us go for the strategy here. Glenmark, let us select here and 2100 put option. The risk is very less. 28 rupees you are buying here and then here you are selling at the money. Say 2000 put option, you are selling here one lot. So now this strategy we are expecting the price to go around 1980. Okay, now here 1980 roughly that time the maximum profit you can have is 20,000 rupees. So now once we have the view, the first is to have the view and identifying the right option strategy and then taking the position. If you buy naked position, because the lot size for Glenmark is 375. So now here for 375, the total premium what you can expect is 375 into say 7 rupees. You are going for out of the money means then 2600 rupees is the total premium you have to pay. And you want to get maximum return, then you go for at the money or in the money. Say 28.7 7 into 375, then it will be 10,000 rupees. Okay, but stock option is always very risky to go for any naked option buying. Okay, very careful you should be and then try to see whether you can exit at a profit. Whenever you see some say 20% hike in the options stock options, then you should try to exit the positions. Now the maximum profit you can see is the price going to 1980 is 29,000 is the maximum profit. And if you want to capture for the next another day is LTF, IPL Apollo. Okay, this way you can see. And similarly you want to see the price moving up. Okay, now you want to see Tata Alexi, Angel One. These are stocks where you can see expect some rise in the prices because the future price is lower than the open trust price. Same thing you can see for the old price also. Ambuja Cement. Okay, Ambuja Cement. My suggestion would be like go for look for some call option only. Ambuja Cement. You can see what happened. Let us see. Ambuja Cement. Ambuja Cement on 5th September. 5th September you can see here closing basis. Let us see here closing basis around this is a place where we closed here around 568. Then from there it went rally for 10 rupees in the options futures. Then here Ambuja Cement on 5th September they are showing opportunity to buy. Then there is a good opportunity that you made around say 550 rupees option you can buy. Okay, let us see here options 550 call option. Okay, 550 call option. Let us see how much was the rally. 5th September it was around roughly around 24 rupees. It made a high of almost 30 rupees. 6 rupees gain you saw in this option 375. Okay, so that's the way you make money in this 1 or 2 days only maximum you should keep it, not more than. SBI card, SBI card you can see here what happened on September. Let us see here SBI card. SBI card. Let us see here the rate was around 800 call option. 800 call option on 5th September, roughly it was around 14 rupees. It made a high of almost 58 rupees. Okay, so call option buying you should get the opportunity. And IRCTC, IRC another example, 700 rupees. Okay, IRCTC 700 call option on 5th September, around what time it was around 22 rupees. It made a high of almost 26 rupees. After holding that, again you got opportunity 20 rupees. It made a high of 30 rupees. Okay, so always there is a good opportunity in this case where the future price is lower than the highest open interest. Okay, highest top open interest. So this is what my video I want to tell here. Okay, this is a price, how to find out the logic, rules, everything. So there is no 100% guarantee that this will happen, but this one way how you can see technically, scientifically understanding where the price can go up. Okay, and if you want to see for Nifty, if you, for example, you want to see for Nifty, now let us see the my bookmark is there for Nifty. Now 9 September, so latest is 16 September, and you can see here this one works very good. So 25,000 call option and put option highest open interest is around 194 is the rate, and then 3.1 lakh is the open interest. So currently I am expecting that in another 2 days the Nifty should correct by 200 points, and then we should expect around 225,000 rupees level. And the call option highest open interest already built up, you can see here 44 rupees and 2400, 2500, 25. All three call options are giving a selling opportunity, and I think on Monday definitely there will be negative, and then this 25,000 call option should become zero on by expiry. Just have a look at it. Hope I think you like this video. Thank you so much. And also highest open PCR is very high, 1.33, highly overbought. So better that the opportunity should be to call option selling or put option buying. Okay, so here also if you are going for some opportunity like this, now what I'll be suggesting is, for example, let us reset here, and then here Nifty. So go for month end expiry, say 25,500 put option, buying that one lot 370, and selling around 25,000 put option, selling that one lot around 15 and 50. Okay, by 16 September, let us see here, by 16 September the expiry date, what will happen. So when 25,000 comes here roughly around this place, you should be able to see around roughly say 7,000 profit on one lot. So this is the way how you do. And total maximum margin what you get is here is for buying the 370 minus 115. The net premium what you are paying is 255 into 75, 19,000 for the premium you are buying, plus the margin 38,000 rupees. So roughly 50,000, 60,000 rupees is the total margin you are involving for one lot. So the 7,000 profit will be 6,000 profit will be around 10% return for 2 days time. Okay, it's a very safe strategy. That's what my this idea tells you. Okay, hope you like this video. Thank you for seeing this video. Thank you so much. Bye.